Hey guys, Stock Saturday, and it's been a rather interesting week, an outperforming week again. The S&P is down sort of just over 2.5%, and the Nasdaq is down 3% from the looks of it. So yeah, I'm up about £1,000 and deposited £1,000, so about 2,000 up on last week overall. This has pretty much all gone into interactive brokers, although yeah, I'm showing it here. This is actually in interactive brokers. I did sell off Porsche, sort of thinking the opportunities were better in the options mostly, and sold it right at the beginning of the week for €47, the remainder of that, and it's dropped down to 44 euros 60. So yeah, not a bad time to sell really. Obviously it was a hell of a lot higher before, but there you go. So yeah, I will come back to that, and let's have a look at the news. So earnings have started, and it's Taiwan Semiconductor that go first. So they're sort of looking reasonably good across the board compared to last quarter at least. Some of which sort of worse than last year, of course. They said this year was going to be a bit slow. But cash is up from last quarter. Investments up as well. Marketable financial instruments. Property, plant and equipment, I always keep a fair eye on. That's up 3.1 trillion new Taiwan dollars, 97 billion US dollars. So that's up from 2.9 last quarter and 2.4 in this quarter last year. So still building heavy, and we'll sort of come to that in a sec. And debt-wise, they have bonds a little bit up. They do sort of generally run a reasonable amount of debt, but sort of always a cash surplus, so that's not too bad. But they don't sort of keep debt super low. We've got sort of long-term debt, $28 billion. That's not really all that much, I thought. And yeah, current portion of bonds is sort of very, very low. It's mostly long-term debt, so that's good. And then income-wise, looking very good. Revenue up quite a bit, 546 billion, up from 480. So that's very good, down from third quarter last year, but that was a very good quarter. And yeah, if they're sort of very quickly catching up with that quarter last year, that's rather nice. And sort of gross profit up similarly, R&D of course up, and yeah, income before tax, net profit is 210 billion, up from 180. Again, sort of less profitable than the 280. Still a little bit more work to go. To get to last year's sort of net income, a bit more than revenue, of course. I guess inflation has a part to play in that, but all looking good. Just switching to their presentation because it gives a little bit different info. This was sort of top end of the guidance for 2023 for revenue. It was above the guidance for gross margin and above the guidance for operating margin. And they don't give guidance for net margin, but it all follows through. So yeah, people were very happy, and it's sort of done quite well off the back of this news. It's I believe slightly up for the week, obviously in a down market. So very nice. And the technologies, obviously. Things do move on. So 7 nanometer, you can see, is sort of trailing off. It'll still get used, but it less so. 5 nanometer is sort of the big, flashy technology, and 3 nanometer has started getting used. So I believe this is sort of mostly Apple on the leading edge with their newest phones, and then sort of other companies trickle into that. And that might be AI as well. I haven't sort of looked into whether the NVIDIA AI chips are 3 nanometer. They might be actually. I believe they're selling sort of basically everything they can get to NVIDIA. And yeah, HPC, high performance computing segment, is still very large, might not be sort of growing quite as much. Smartphones are still sort of growing an awful lot. Automotive is a bit down this year, sort of. Chips not doing quite as well. There's a lot more chips involved in EVs as well, so they've sort of taken a little bit of a hit in China, certainly. And then the fourth quarter guidance is very strong, so 18.8 to 19.6 billion revenue, where you had 17.2 billion this quarter, so that's very nice. Gross profit, they're saying, is sort of roughly the same guidance as this quarter, and operating profit basically the same, although they beat that this quarter. Had some sort of major events as well, which they like to highlight, sort of net zero targets and that sort of thing. Not sure I would read into that too much, but they've been buying, so they've purchased 10% equity of IMS Nanofabrication Global from Intel, which is surprising, for $430 million. So had a quick look up of these, and it's a mask writing technology. Sort of, yeah, whether this, I need to sort of have a quick read as to sort of who this competes with. I was initially sort of thinking it was competing with ASML, but I don't quite think that's true. But it's you know, a small company from the looks of it, and a growing technology, or relatively small company. But yeah, very nice, a nice buy, and they bought 10% of the or $100 million of ARM. Yeah, just to sort of to have a little interest and sort of, you know, have a little bit of influence, I guess. You're not going to have too much influence for 100 million, but yeah, I believe a lot of other companies have taken on some of that, even if they thought the IPO was a bit expensive. I guess it's worth it for a bit of influence. You got MediaTek as well, using the 3 nanometer process, going to be starting production in 2024, so sort of getting away from just Apple using the leading edge stuff. That's very good, or whether it is Nvidia as well, but always good to sort of broaden it out. I don't think MediaTek get too much love, though they sort of well, have generally been thought of as the more value CPUs, when Qualcomm and obviously Apple wouldn't use them, but the sort of the value and budget section of Android phones, basically, more in sort of Asia as well, tend to use MediaTek from the looks of it. So good to have them as a large customer, and a joint venture for advanced semiconductor manufacturing to Europe. So they've been talking about whether to be building a fab in sort of in Europe, Germany or Poland or wherever. I think there is still plans for it, but yeah, that's good. Dividend doesn't really sort of, yeah, they approved the cash dividend. It's not a huge yield, so it's sort of not really all that much interest. I just say thank you very much when it comes in. And then we've had some production results from some of the miners. You don't get earnings just yet. They tend to, well, Rio do half yearly, and Vale to come. The quarterly results will be a little bit later. But yeah, you get the production results, which gives you a decent idea, considering you know the commodity prices. And yeah, it's all looking rather good versus sort of Q2 versus last quarter. Pretty much everything is up. Iron ore, which obviously is the vast majority, up 6%, 3% for 6% on shipments, 3% on production. Bauxite up, aluminium up, copper up 17%. They kind of forecast that before, so that's good. Titanium down a little, but these are sort of smaller segments, so yeah, not bad overall. Also pushing the aluminium side from the looks of it, acquired 50% stake in Metalco business for $700 million. So quite a lot to be spending on aluminium. Capacity to produce 900,000 tons of recycled aluminium a year. So aluminium, I believe, is potentially going to be used a lot more in EVs because it's a lighter metal than steel, and yeah, they want to make the cars lighter because EVs are quite heavy with the batteries. So you're getting sort of half a ton, I think, on sort of quite a lot of average cars, which isn't ideal. You don't want half a ton on any car. So they're trying to lighten the cars quite a bit, and making more of the body out of aluminium could do that. So I think that's just one of sort of decent potential uses for aluminium in the future, and sort of seems to have rather a bright future. And Rio Tinto is sort of one of the only miners that really sort of have any noticeable exposure to aluminium. So I do like Rio for that. I would sort of prefer it was a little bit less iron ore, but yeah, there you go. And then pretty much all of the guidance is unchanged, so looking reasonably good for the year. Notice their copper unit costs. Not sure this is. I don't think the C1 is all of the costs, but 180 to 200 cents, so $2. So with prices at coming down to around 350 at the moment, it's not bad. Would prefer obviously back to the sort of highs of $4.75, $5. Hoping that will come in the future as Rio start increasing their production. And then Vale, production again, production only. It's not earnings, but you get the idea. So iron ore is up on last quarter, but a little bit down on this quarter last year. Up overall, if you look at the 9 months this year compared to 9 months last year. And the pellets up overall as well. Copper up all across the board, really. Up from last quarter, significantly up from this quarter last year, and the 9 months significantly up. I think again they did forecast this, so yeah, it's looking good. Production was increasing of copper. They were sort of ramping up new areas, so looking good. Would like copper again, similar to Rio, to be a larger part of Vale, and I believe they're still looking to potentially sell off the the copper and nickel sort of battery metals as a separate company. I'd kind of rather they didn't, maybe. Depends sort of if they get a huge price being a battery metals miner. But yeah, I kind of like sort of all in one company. Nickel was sort of slightly down for the 9 months, sort of down quite a bit on last year, but slightly up on last quarter. So yeah, the nickel price doesn't seem at a sort of, whenever I look at the earnings, it's a terrible profit margin. So we'll have to see where that goes in the future. If the sort of new batteries still use nickel, and sort of whether there would be a shortage. So yeah, interesting one that. So look at some of the news. Quite a lot of UK news this week. You've had earnings. People are sort of keen to be looking at this because this is the bulk of inflation. We're a service-based country, so average earnings still at 7.8% compared to last year. And bonus, including the bonus, it was a little bit worse than. Or a little bit lower than expected. That's better. Down from last month, but still very high, 8.1%. So people are getting bonuses, or more bonuses than last year. And retail sales quite a lot higher than expected. Some sort of a mixed bag compared to last month, but they were expecting this to come down quite a bit, and it hasn't. So people are still spending an awful lot, whether this is sort of just cash and people have got a lot more money. That kind of flies in the face of cost of living crisis and inflation hitting people, or whether they're putting it on credit cards and that sort of thing. Don't really know. I'm sure people are trying to dig into it. And Wednesday you had the inflation data. It's kind of slightly worse than expected across the board. Core CPI for the year increasing, not what we want at all. 0.5% on the month. So it's not even as if the numbers are high, but the recent data is good. So yeah, that's not good. It was 0.1% last month. So that's rather a high month. And sort of headline, similar basically on the yearly, slightly up, and on the monthly, 0.5%. So people are all sort of expecting energy to be playing a big part at the moment, with sort of oil up and gas potentially up as well. Sort of thinking going into the winter, but then you sort of expect the core inflation to be not quite as much affected, but I guess energy does go into everything sort of associated with core as well. And then obviously the wage inflation is still high, so that will be keeping core high as well. So I'm not sure whether this means they're going to be drastically hiking interest rates because of this, but probably means we're not getting a cut anytime soon. To the EU as well. EU sort of released their provisional figures earlier, but this sort of confirms it, basically all as expected. But that is quite a lot lower than last month. They're at sort of mid 4%, where we're at 6% and above. So not good compared to the EU. And yeah, that was sort of largely it for the news for the week. Sort of jobs data was just a bit of a mixed bag. But I also noticed the federal budget balance. So this is basically the deficit, and they sort of had a positive figure, a 1 month surplus. But this was sort of basically a one-off. If you look at sort of drill down, it was 171 billion deficit for September. Was forecast at 78 billion, and this has been basically a long-running deficit with a few one-offs. So monthly sort of mostly 200 billion average deficit, which is very, very high. So they're obviously having to borrow a lot more and issue new debt. That's pushing yields higher, and yeah, it's just sort of a constant. Some people are sort of thinking the bonds are high, so we'll buy long-term bonds. But when you've got, if they were at sort of a neutral budget, then that wouldn't be too bad, and you might get some safe haven buying for bonds. But while you've got this constant, issuance of debt from the government, it seems like a headwind to buying bonds, and something more that you would just want hard assets, which is my way. Gold, silver, crypto, commodity-based stocks, and all that sort of thing. So yeah, that's my thinking. This is one that I do keep a keen eye on. So not a huge change in the portfolio, certainly in the invest account, other than selling off Porsche. As I say, sort of, it's one that I've generally been bullish on, and kind of still am. They're still doing well in the sort of EV sector, but not really in China, and sort of the petrol and diesel side, certainly in China, I think is going to trail off. They're at sort of 40% electric vehicles now, including hybrids, but VW don't really seem to be getting a lot of those hybrids. It's more BYD hybrids. So yeah, a lot of their profit has historically come from China, and if that's sort of going to be drifting off, they don't seem to be making much headway in China, and sort of elsewhere it's a bit of a mixed bag, then maybe it isn't the sort of excellent value that it has been. Compared to sort of Stellantis, they've never really had very much traction in China, so China going EV doesn't really affect them all that much. They've generally been a well, Europe from the Renault, from the Peugeot, Citroen, and Vauxhall side, and then the American brands. So that's always been their target market. Whether the US starts switching from Ram trucks and that sort of thing to the Tesla Cybertruck maybe, or the Ford EVs and that sort of thing. It's a bit up in the air. They've got their truck coming out, but yeah, balance sheet is far, far better, and I just see them as a more interesting prospect. So obviously I didn't sell Porsche and buy Stellantis, but I'm just keeping that as my vehicle stock, and the Porsche money went into options. Not a lot of change in the rest of these as well. The ISA side is where some of the gain has been made. So gold and silver miners, Coeur mining up to over 13,000 now. I sort of spent a long time averaging down on that. And yeah, Equinox doing quite well. Clean Spark sort of did rise into the sort of 420, 430 range, and has sort of trailed back. Bitcoin now at 29,500, so that's looking good, although their costs are going to be going up quite a bit. Still haven't spent the cash. Got my sort of money market fund at about £8,000. Haven't really seen anything I wanted to sort of go for. This would have sort of gone into probably gold and silver and crypto if it had have come lower, but we'll have to see what happens. Similarly with the IG account as well, sort of silver doing well. Obviously my Clean Spark there, and Atalaya mining doing okay, even with the low copper price. Yeah, Chinese tech sort of down quite a little bit. Baidu has sort of gone into the red. That was in the green not so long ago. That's taken quite a hit. And Alibaba down to under $80 now. So that's not good at all. But options wise, I'm still buying. Haven't actually bought any more Coeur mining. That's just come up to 4,400 with the gold price. But Equinox up. Bought some more Himax. That's sort of the only one that is lagging behind in price. So the options for prices have been coming down quite a bit, and I took the opportunity. So yeah, I've added a little bit of money into these, but they're up to 8,600 now, where I've only added sort of 300 quid, I think, in the last week. So performance has been pretty good, but I'm not in this for 1,000 or two. I'm in this for sort of end of next year, end of 2025, really, and sort of see if these can do multiples. So yeah, that's more money gone into them, and hopefully a lot more money going into them in the next couple of months. So yeah, see where we go. Leave your thoughts in comments below, and like and subscribe. See you soon.